The S&P 500 closed Wednesday down 0.02%. 0.02.
And the tracking fund traded 61% of its 30-session average volume. The Nasdaq fund, 48%.
Under half a normal day. Semiconductors, 41%.
So nobody wanted to be holding a position at 4 o'clock.
Because everything that mattered on Wednesday arrived after 4 o'clock. Nvidia, Salesforce, and CrowdStrike all reported after the bell.
And the one thing that arrived in the morning said the goods economy is shrinking. Quick note, this is education and entertainment, not investment advice. Companies are examples. Never buy or sell calls. Do your own research.
S&P 500, 7,675.70, down 0.02. Nasdaq Composite, 26,130, down 0.08.
Dow, 53,464, down 0.21. Russell 2000, 3006, down 0.14.
VIX 1521, down 1.55%. Semiconductors up 0.26.
10-year Treasury, 4.66%, up 2 basis points on the day.
Now the volume, because that is the part worth sitting with. The S&P tracking fund at 61% of its 30-session average. The Nasdaq fund at 48, semiconductors at 41.
But Nvidia itself traded 123% of its average. CrowdStrike, 165. Intuit, 302.
So this was not a quiet market. It was a market that stopped trading the index and put everything into the names that were about to report.
Which is a different thing entirely from calm. Revenue, $96.2 billion, up 106% from a year ago and up 18% from last quarter.
Data center, $89 billion, up 117%.
And here's what gives that scale. 3 months ago, the company guided this quarter to $91 billion, plus or minus 2%.
So the top of that range was 92.8. They came in $3.4 billion above the top of their own range.
Gross margin, 75.0%. GAAP and non-GAAP, the same number.
Earnings per share, $2.46 GAAP, $2.22 non-GAAP.
Hold that pair. We are coming back to it, and it is the most interesting thing in the release.
Third quarter revenue guided to $108 billion, plus or minus 2%.
From 96.2. That is 12% sequential growth, guided, on a base that just grew 106% year over year.
And here's the sentence from the filing, word for word. Nvidia is not assuming any data center compute revenue from China in its outlook.
0. The $108 billion contains no China at all.
And this is the second consecutive quarter that sentence has appeared. The $91 billion guide carried it too.
Which changes what it means. They did not just guide to 108 with China at 0. They already beat a guide with China at 0.
So China is not a risk sitting inside that number. It is an option sitting outside it.
The quarter gross margin is guided to 74.0%, plus or minus 50 basis points.
Down from 75. On revenue guided up 12%.
And in the same release, a multi-year technology partnership with SK Hynix for next-generation memory.
Those two facts belong together. Demand is not the constraint here. Input cost is?
Also in the release, Vera Rubin is in full production, with racks running at CoreWeave, Google Cloud, Microsoft Azure, Oracle Cloud Infrastructure, and Nebius.
Named customers in a filing in production. That is about as concrete as a platform ramp gets.
And the company returned $26 billion to shareholders in the quarter.
Back to that pair. GAAP earnings, $2.46. Non-GAAP, $2.22.
Non-GAAP came in below GAAP. That relationship normally runs the other way, every quarter, at almost every company.
Here's why. From the first quarter of this fiscal year, Nvidia's non-GAAP measures no longer exclude stock-based compensation.
And the release says the historical non-GAAP figures were restated to match. So inside Nvidia's own release, non-GAAP up 120% year over year is a clean comparison.
What is not clean is an estimate built before the change. Those were built on a basis the company no longer reports.
Same numbers. Different ruler.
Salesforce. Revenue $11.3 billion. Up 11%. Current remaining performance obligation, $33.5 billion, up 14% and accelerating.
GAAP earnings per share, $429, up 119%. Non-GAAP, $590, up 103%.
Now the income statement. Income from operations this quarter, $2,331 million.
A year ago, $2,332,000,000.
$1 million lower on 11% more revenue.
So where does 119% come from? One line. Gains on strategic investments, net, $2.6 billion this quarter against $6 million a year ago.
And Salesforce tells you exactly what that was worth. Their own footnote. Those gains added $2.43 to GAAP earnings per share and $2.53 to non-GAAP. A year ago, both were zero.
Take it out. Non-GAAP goes from $590 to $337 against $291 a year ago.
16%, not 103.
And the investment gain is not the only thing moving that comparison. There are two more, and both are disclosed.
Revenue up 11%, and $456 million of the quarter came from Informatica, which they acquired.
Back that out, and the underlying business grew about 6.5%.
Then the share count. Net income was up 87%. Earnings per share were up 119.
The gap between those two is the buyback. Diluted shares went from 962 million a year ago to 821 million against a $25 billion repurchase program.
15% fewer shares to divide the profit into.
So, an acquisition in the revenue line, a buyback in the share count, investment gains in the profit. 3 levers, all disclosed, none of them the operating business.
And to be fair to them, remaining performance obligation accelerating to 14% is real. And it is the number that says the demand side is fine.
That is the week's pattern across 3 companies.
Nvidia, non-GAAP stops excluding stock compensation from the first quarter of fiscal 2027.
Intuit, the same change, the same quarter, in its own words. Our non-GAAP financial measures will no longer exclude share-based compensation expense. Plus a MailChimp segment reporting change in the same guidance.
Salesforce, Agentforce annual recurring revenue passed $1.5 billion, up 240%. And effective this quarter, that figure now includes their AI offerings, Slackbot, and Headless 360.
Every one of these is disclosed. None of it is hidden. It is all sitting in the releases.
But the estimate on your screen was built before the definition moved. So the rule is simple. Before you call a print a beat or a miss, check that what the company reported and what the estimate measured are the same thing.
4 names in 5 sessions where that mattered.
Which brings us back to the morning and the release nobody was talking about by 4 o'clock.
July. Personal income and outlays. Real personal consumption, 0.0% for the month. June was up 0.4%.
And real disposable income was up 0.4%. So households received more in real terms and spent none of it.
Saving rate, 3.0%.
Now the composition, because that is the story. Nominal spending rose $36.3 billion. That was services up $86.2 billion, offset by goods down $49.9 billion.
Goods spending contracted by $50 billion in a single month.
Prices. Headline 3.7% year over year, core 3.3%. Both up 0.2 on the month.
So line them up. AI infrastructure guided to $108 billion for one quarter at one company.
And the goods consumer went backwards by $50 billion in a month.
With core inflation at 3.3% and not moving.
That is our read, not consensus. Those are 2 economies. And an index closing flat at 0.02% is not the market splitting the difference. It is the market not having an opinion yet.
It gets one on Friday.
Sectors. Industrials led, up 1.09%. Technology up 0.61. Energy up 60 basis points. Utilities up 0.46.
Healthcare was the laggard, down 1%. Consumer discretionary down 0.67. Real estate down 60. Communications down 50.
And the VIX fell 1.55% to 1521.
Into the largest single event of the quarter. Volatility got cheaper on the afternoon before Nvidia reported, and 2 days before a new Fed chair's first Jackson Hole.
That is premium being sold. It is a position, not a mood.
Jackson Hole runs Thursday through Saturday, the 27th to the 29th.
And the topic, from the Kansas City Fed's own listing, financial innovation, implications for payments and policy.
Payments. Stablecoins. Central bank digital currencies.
We went through the published archive of symposium themes back to 2000. 26 years of them. Not one is about payments.
Kevin Warsh gives the keynote Friday at 10 a.m. Eastern, his first as chair. The topic has not been published. The full agenda publishes Thursday at 8 p.m. Eastern.
So here's the asymmetry, and we are calling it an asymmetry and not a prediction. A market positioned for a message about rates is walking into a venue whose own theme gives the chair a legitimate reason to talk about something else.
5 things, all dated.
Thursday, 8 p.m. Eastern, the Jackson Hole agenda. If Warsh's session is titled to the payments theme, Friday probably does not carry a rates message. If it is framed around the policy framework, it does.
Friday, 10 a.m. Eastern, the keynote itself.
Nvidia's third quarter reporting in November. Gross margin is guided to 74, plus or minus 50 basis points. Below 73.5, memory cost is more than one quarter's problem. At or above 74.5, the SK Hynix agreement locked supply early.
Salesforce's third quarter, and watch income from operations, not earnings per share. This quarter, it was flat. 2 flat quarters in a row is a different company than 119% suggests.
And September 30th, 8:30 Eastern, August, personal income and outlays. A second consecutive month of goods spending falling makes July a trend rather than a month.
Wednesday's index close was flat. Almost nothing else about Wednesday was.
One company guided a single quarter to $108 billion with China set to zero. The same afternoon, the goods economy shrank by $50 billion in a month.
Both are facts. Neither is a forecast.
And the thing worth keeping from this week is smaller than either and more useful. 3 companies changed what they were counting. Every headline comparison built on the old count stopped meaning what it looked like it meant.
Check the basis before you check the beat.
That is our read, not consensus, and none of it is investment advice. We will see you tomorrow. That's a wrap. If this was useful, follow or subscribe for the next one, and tell us where we're wrong. Thanks for listening.